So let's transition into the other market that you are providing, Tuscaloosa, Alabama. Okay, Maureen McCann, again, your Spartan Invest is also providing rental property investment opportunities in Tuscaloosa, Alabama. So let's use the Redfin weekly housing market data to look at this, what's going on in real time in many real estate metrics. So we can start off with median sales price. Okay, year over year, we're going to start off with 2019. The median sales price of a home in Tuscaloosa, a single family home, in the normal multiple listing service market. I know you guys do off market turnkey property for strictly for out of state investors, and no one else have purview to your inventory except the investors that are in your database, those members, like for example, for my organization and a few other organizations that we're working together. But we look at the big picture, the resale market out there in the Tuscaloosa metro market, what the primary home buyers, what they are looking at when I show the data. So the purpose of this data I'm showing is for potential primary home buyers, the potential owner occupant, to look at the housing trends based on this Redfin weekly housing data. And also for real estate investors, when they look into this market, when the out-of-state investor looking into this market, they need to do some research, right, and due diligence. And looking at this trending data as provided by Redfin will allow them to get better educated, to determine whether the data and the trends in the future is such that is worthy of out-of-state investors to buy a rental property in Tuscaloosa, Alabama, in which your company, Spartan Invest, is in a position to assist with the investors. Am I right so far in my recap?
Yes, you are.
All right. So with that in mind, so right before the pandemic in 2019, the median price of a Tuscaloosa home, single family home, is $176. So let's look at the appreciation year over year from the past 2 years until now. So from 2019, and then from June of 2020, which is right at the beginning of the pandemic, the market has increased in value in Tuscaloosa, 9% appreciation year over year, 2019 to 2020. Then from 2020 to 2021, wow, look at this huge increase.
24%. I know.
4% year over year from July to July, which is mind-boggling. Double digit, right? And
12 months.
Yeah, from 2021 to June of 2022, increase to 267. So 230 to 67, another 16%. So we're talking triple digit appreciation for the past 3 years in Tuscaloosa, Alabama. And who would have thought of that, right? So, I mean, we're showing you guys out there in the YouTube world or whatever world you're looking at our presentation. I mean, all the trophy market, if you will. Phoenix or Tampa or Austin, Texas, or Boise, Idaho have achieved massive appreciation. Those are cute, and those are a trendy market, but little does people know that when you look deeper, when you dive deeper into other obscure, so-called not so popular market, you're gonna find some diamond in the rough, right? So it's just, a real estate investor or a primary home buyer, they need to do a deeper dive into other sub-markets in other part of the country, right? And don't fall with the trophy markets and what you hear, sounds good, very whatever, because there's a lot of markets that are not in the mainstream media out there that true smart investors, they look into this kind of market, such as here in Tuscaloosa, Alabama. Who would have thought, right?
And SeeWing, what I did was, while you were talking, I looked at, let's see, I took the one where we had from 2020 to 2021, it was a 24% growth in this market. right? So I just did some quick math, right? And I said I took $170,000 house and I multiplied it by 24%. So it grew 24%. So that $170,000 house, had you bought it in 2020, 12 months later in Tuscaloosa, Alabama, and it increased 24% in value, that was an additional $40,800 in 1 year. In 1 year, right? So let's say that investor who bought that $170,000 house put 20% down, that's $34,000. Divide it by the 40,800 in equity, that's a 83% rate of return in 1 year.
Wow. That's mind-boggling. That's mind-boggling.
But that's real. I mean, this is what my investors have experienced, right? And so this is why you and I are so passionate about this, and why we talk about this a lot, is because the economics may change around us. Recession, depression, are we in it? Are we not in it? You know, rising interest rates, falling interest rates, like there's a war, you know, there's supply chain issues, there's economics around us, but the fundamentals of investing in real estate do not change. You earn through capital appreciation or equity growth, cash flow, depreciation, hedge against inflation, loan pay down. Those are the fundamentals. They're going to be existent in any economic cycle.
We're absolutely right. So, you know, investors need to focus in each particular sub-market and just tune out all the noises, because, you know, what's going on in the economy, you know, you cannot control. Control your action plan, and yeah, and just look at the metrics, do your own research. I'm helping you guys expedite your research. I'm providing some real housing time data, and it's just amazing. I mean, your market, this Tuscaloosa market, you provide a good product for investors, cash flow, good rental market, good return, good cash flow with a. So anyway, let's go on. So we see that there's a good trend. So very stable market, and yet a lot of people does not know about it. They're not in tune with Alabama yet, which is good. We don't want all to let this word out too much. We want our own.
Go to Florida. Keep going to Florida.
Yeah. We like to keep this sub market to ourselves and help the investors that we're working with to achieve wealth. And everybody could be surprised when when the portfolio of our investors grow in your market. So anyway, very good trend. So let's look at the other trend. Let's look at month of supply. I know typically a balanced market is like 5 to 6 months. So let's look at month of supply in the metro area. Weeks of supply. Oh, this kind of hard to tell.
It's flatlined.
So 13 weeks of supply. So a little bit more than 3 months supply inventory. So I think I'm reading this right.
That's 2019.
I'm sorry. What's 2021? 2021 is in here.
It's all kind of in there. It's all blended together. It looks like that's weeks of supply year over year.
Well, can I even see 2022? Where is it?
I think it is. Let me see. Those are the blue lines. 19 is 2019. It looks like they all. I would kind of go here, SeeWing. Yeah, let's.
Oh yeah, right here.
Pick one of those colors.
Okay, right here. Okay. Okay. This is weird. All we can do. I saw 2022 a moment ago. Did I?
There's 2021. All right. No, that's hard. That's hard to get. That's like you gotta really be finessed.
Yeah, this graph is very, very unique. It throws me off because the trend line was so similar from year to year in the past 3 years. So you can't. Wow.
Yeah, you can't even get to 2022. It's all sort of they're all layered on top of each other. I would just go with 2021. I mean, just a year ago. You know,
should not change that much. Okay, let's.
Yeah.
Wow.
It's not like they're. I mean, we are building houses in Tuscaloosa, but we're not building that fast, SeeWing.
Okay. All right. Exactly. Okay. 2021. a year ago, the weekly supply was 16 weeks. Like, so that's 4 months of inventory. So still as a seller's market in the out there in a public market in a multiple listing service, still there's a shortage of homes relative to the demand. So that bodes well for real estate, and the prices should increase perhaps a single digit price appreciation in the Tuscaloosa market. So let's go through the what things we want to look at from now on. Let's look at new listing median price is 269. So it's again the new listing median price from year to year from 2021 to 2022 is a 17% appreciation. In 2021 is 234K. In 2022, right now, this month of August is 268. So it's trending upward. Year to year is trending upward. So it's a good sign because for that reason, even though the interest rate is higher now for the general public, let's look at new listings. New listing is 77 listings this past month, 14% higher year over year from last year. The new listings were higher a month ago. So let's look at active listing, which is a big picture of all the houses that are listed for sale currently in Tuscaloosa. 732 homes for sale, and then we can look at average sale to list price. Based on the list price, the actual sales price is that they're asking for the same price or below the list price or above the list price. So let's look at the current trend right here. Average sale to list price is 0.9. So that means if the list price is 200,000, for example, the actual sales price may be a few thousand below 200,000. So still nothing crazy, still a good, healthy market here in Tuscaloosa.
Stable.
Yeah, so very stable. So that's what we expect. Any other clicks you want me to? I think we're almost concluding with Tuscaloosa. Let's look at days to close. Let me see how it closed. The house closed within 30 days, which is a normal market. No, it's not crazy like 6 months ago when the interest rate were low and where people getting multiple offers and the house gets closed within a week, it gets sold. But now, the buyers have more negotiation power. They can pick and choose. They can go through the normal escrow. 30 days is pretty normal. Nothing out of the ordinary.
Nothing out of the ordinary. No.
So anything other trends we'd like to go over other than if not, then I can do a little bit of recap in this market. So that we'll conclude with this presentation. So
I'll say you do the recap. I'll throw a plug or two in there, and then we'll wrap it up.
Yeah, Tuscaloosa again. Knowing I'll be working with your turnkey providing group, Spartan Invest for a while now. So I see the value add in promoting Tuscaloosa, this sub-market, which is, as we mentioned, is not in the mainstream media's radar for the time being, which is good. We don't want people to oversaturate this market, right? And we want our existing out-of-state investors to take advantage of this market and to get in before everybody knows about it, before the news media get a hold of it. So the value proposition you guys are promoting with your company, Spartan Invest, you're providing off-market, ready to go turnkey properties, all rehab, all fixed up on the resale side of it. Very good price, and most likely below market value. And you have a good rental market. You have a great property management. So the price point for Tuscaloosa, as I see your inventory listing from time to time, is in the low to mid 100s. So it's a very good price point. If you look at the other housing prices in the other part of the country, those prices are a lot higher, double, triple higher than Alabama. So Alabama right now has a very reasonable price, especially for investors, mid 100s, and it rents for, the low $1,000 rent range, good cash flow, positive cash flow, a slight positive cash flow, 25% down payment. But the future is very bright. I mean, we see migration of people entering into Alabama, and so everything looks very positive. So investors can buy into your market with good cash flow, still low price point compared to other markets in the country. It's a good value proposition. So good return over time. So that's my takeaway. So what is yours as we conclude this?
Yeah, these little markets that we find in anyone, any investor that's listening, they could find their own, little niche market as well. But here's a little, little area called Tuscaloosa, Alabama, known for being a, home of the University of Alabama, Roll Tide. And there is tremendous opportunity. There's lots of manufacturing companies in Tuscaloosa. And that's, there's a lot of workers that, work in those manufacturing plants that need housing because they're not going to be able to afford to buy. So it's a really, really good market for us. You add in that the Alabama has, I think Mississippi beats us as far as the lowest property tax rate in the United States, but we're right up there. Let's call it number 2. We're in pole position 1 or 2. I'm not sure who's in first place, but you get a niche market like this somewhere that is not on the popular, 10 best places to invest list. I don't really want to be on that list because that draws a lot of attention. That draws more, institutional money coming in, and now you're competing with Goldman Sachs and the Wall Street cats on acquiring the property. So as long as these little niche markets fall under the radar, but yet they're growing, they're cash flowing, the price point. I just got 5 new listings today, not brand new, the resale, the rehab properties. We just got 5 properties in Tuscaloosa today, this morning, from 150. They're priced at 115 to 130. These are the kind of rental properties you want to get in on because it's a low capital outlay of capital, and then you've seen that the one trend line that SeeWing was showing is that the equity growth is still there. It's just not as prominent as it was 12 months ago, but it's still on the incline above where it was even from 3 years ago, 4 years ago. So it's a good, strong, stable market, lots of good job growth, lots of manufacturing there, anchored with a big school, a university that's not going anywhere. That keeps the local economy stable. And these are the little niche markets you guys want to find because that's where the diamond in the rough is.
Absolutely, Maureen, is absolutely true. I totally agree. And investors need to pay attention to this market. Okay, so you buy early before the worst get out there. So, and you'll be a happy camper once you take action. So thank you so much for another great presentation, Maureen McCann from SpartanInvest.com. And my name is SeeWing Yee from the Yee Real Estate Network. Thank you for attending. Have a nice day. Goodbye.
Bye.